Welcome in, all of you trader nerds. Hope you're having a fabulous, fabulous day. Welcome into the show. This is the Trader Nerd channel. And if you'd like to be a part of our Discord group, you get 3 free days before you're being charged, and you can cancel any time after that. So look in the description down below and join our little group. It's a nice little group. So let's see what we got going on today. Let's look, let's do our trades. So this account is, let's see, figure out where it's at. Oh man, we just keep going down. 36,657. What's wrong with this account? 36,657. Like this. 36,657. Why is my theta not decaying? I want my theta to decay. Come on, bring my profits in. 330, 23. So we're down just a bit. Let's see what our Greeks and ratios are. Over here. Let me hide my account number. Privacy mode. Privacy, I say. All right, here we go. This is a Tasty account. So we are at negative 13 delta. Well, no wonder. Negative 13 and 33. Negative 13 and 33. You think we make our $33 a day. Negative 13 and 33. Negative 13. 33. And I guess we're still at 19. We're under 20 anyway. That's all that matters. And our buying pair is 94.78. So this one is just screaming for a trade, right? It's like, hey, Bob, you don't have enough theta in the tank. We want that to be 0.1 and we're at 0.09. So let's go, what do you say? Put us in a trade. It's been a while. So we'll go to MES. The micros. Yes, it's a futures product. Don't let it scare you. And I like going closest to 60 days without going under. And we'll do a long put vertical. And we'll do it 50 wide. And then we're going to move that little puppy down till we get him at $10. There we go, 975. Let's go up to a 10. I said, no, I don't want 2 of them. I want quantity 1. I want my price to go up, Bob, to $10. And let's get that one filled. Well, the county said to close the note. No, they fixed that yesterday. Hold on, I got to log out and log back in. It should be fixed. Let me do that.
Did they tell you what the issue was with it when they fixed it?
Yes, apparently they thought there was a suspicious login attempt, and so they shut it down. So I got on the phone.
That's good that they're looking out for you.
Oh yeah, and which was probably me when I got my new computer, right? Because I hadn't traded in this account in a long time. Let's see if it'll let me now, or maybe I got to go over here and log out. Where do I log out at? Let's see, log out. Log out. Let's see, watch this. Let's see if it'll let me now. Because I was sitting there thinking it was something like, oh my God, I'm using too much buying power. I thought, let's see, 62. Let's see it again. Long put vertical. Yeah, so that's good that they're looking out for it. See if we'll let it. I may have to totally somehow log out. Let's see, move that up to 10. Count is set. Oh, how do I sign out, though? How do you sign out?
Bottom left-hand corner.
Bottom left, sign out.
Oh, got it. Let's sign out, sign back in. Because the dude I took to yesterday said he had fixed it. Well, why did I thought I signed out? Well, I logged in twice. Oh, that's what it was. Now, well, let's try to sign in. Here we go. We'll get it. And if not, I'll get back on the phone with them. All right, here we go. Get me in. And they did tell me I might need to sign out and sign back in. I thought I signed in. What the heck? Here we go. Did I open that twice? Weird, man. Weird, Bob. Now let's see. That looks weird. Where's my stuff at? My stuff. All right, 62 days. Let's see if it'll let me do it again. Long put vertical, 50 wide. It's like deja vu all over again, man. We just keep doing it. Nine, 10. Oh, unbelievable. So now I'm going to call them again. Unbelievable. Okay, well, that's fine. I'll get back on the phone and say, hey, you're supposed to take care of it and you didn't. All right, no big deal. So we know the 3880 and the 3830 is where I need to be in case I need to do this in the other accounts. Unbelievable. Unbelievable. All right, so let's go to the other accounts. I wish they wouldn't tell me one thing and then not fix it. You know, oh yeah, I got it fixed. Okay. You may have to log back in. Yeah, log back in. So let's go to the Crimson account, see if we're up or down today. So our Crimson account is 34,174. Oh, dang it. Man, I was really hoping to play the Jeffersons today. That just gets me going. All right, 34,174. We're down a little bit. We're up 1.15% on the year. Our Gregson ratios. Maybe time to take off a future. Let's see. So we are at, say, 18. Well, now we got it coming out here. See, Ed's messed us up. We got all this stuff. We got, so 17 here minus 3 is what? 17 minus 3 is 14. Right? So we're about 14 deltas and 49. 1449. 14. 49. That's good. Our theta's really good. 19 here. And our buying power is 8,200. VIX is taking nothing. So, yeah, 8,200. Okay. I mean, I don't see anything to do here, do y'all? I mean, I would not take off a future because that would put me at 64. I would be over that. There's nothing to do. Just sit back and enjoy the theta decay. It's a beautiful problem. Let's go see if any of our trades say that they need attention. So I'll be looking at this auto close date here. Now, I think that I've got the auto close date set to, if it's a naked put, it should close. Let's see, if it's a naked, if K56, which is this, is less than or equal to 21, that's when I'm going to close those. Right, and I'll just roll them back out. Now, also, I'm kind of keeping my eyes on this too. And there's a part of me that says, hey, Bob, you know, you need to keep your put debit spreads in line with your naked positions. I agree with that. But at the same time, I've got 6 long hedges in here. So until these long hedges are gone, I'm fine with the way it is. Plus, we're short. I mean, we don't have a lot of deltas at all. So I think I'm fine with where this account is. I think we're good. Let's see how we're doing in comparison to the market. The market's killing us so far after Armageddon, but we will be back. We will be back. Don't worry. It is just a matter of time before we catch the market. Just give us time. All right. I think we're good there. So let's go to the final account. And this one is at 82,928. 82,928. Dang it. 82,928. 330. All right. So this one, see what our Gregson ratios are. We are at 26 minus 11. I'm doing a lot of math in my head. What is that? 26 minus 11 is like 15 or so. So we're at 15 and 85. 1586. 1586. So 1586. Aha. We got that up to back to 0.10. That's good. 19. And our buying power usage over here is 24,357. Now, remember when we started this week, we were kind of like, hey guys, I don't think there's a lot that we need to do. I really don't. Let's look at the big green monster because I do have a future or two over here that I could take off. That would put my deltas at 65 if I took one off. How many do I have over here? How many futures we got? Futures. I only got one future. Yeah. So I may can take him down unless the big green monster convinces me otherwise. Let's see if the big green monster convinces me to keep it on or not. Yeah. Because I'm thinking, hey, we could go here, right? We're now over, I don't know though. Well, we're overbought still. So we come into oversold territory, but we quickly come back into overbought. We're going to draw this thing again on Monday. So I don't know. I could take that off. I could see me taking that future off. I mean, I don't really need it. All right, let's just get out of it. Yeah. Get out of the future. It did its job for us. We no longer need it. So you kind of let the metrics tell you when to take those off, right? So I think that's fine. But I don't see anything else I need to do here, which means it's a good day for us to do are you ready for this? All right, so let's go into a best practices video, which means we're going to go into the best practices of our strategy. So let's pull up what do you call strategy? So CSH 324, this should be it. This is our last strategy. So this is our trading plan. Ladies and gentlemen, if you are trading without a trading plan, every trade that you put on is a stupid trade. You hear me? If you don't have a trading plan, you say, well, Bobby, I'd kind of like a copy of yours. All you got to do is go into our Discord room and it's under written trading plans, absolutely free for you. So hop on in and get that. So let's view full page and let's make this bigger. All right. So here's our little plan, right? So let's kind of go through the trading strategy is composed of two primary components, naked puts and a put debit spread. Okay. So the put debit spread is, let's see what color I want that. Let's do blue. The put debit spread, y'all, is 50 points wide, right? And I do them in /MES, which is the micros. If you got a bigger account, you can do it in ES. And we like to pay a debit of $10 for those things. Okay. So that's where a put debit spread is. And where does it go? Well, I go closest to 60 days without going under. So that is our put debit spread. Then it is composed of naked puts. Now, we have been trading 112s more than 111s. You can do 111. So then what I try to do is sell a naked put in the same expiration where I'm getting $12 and I do two of those. So I'm collecting $24, right? And that's generally about the 5 to 6 delta. Right? So real simple. That's the strategy. That's what we do. And we do it over and over and over and over. Yeah, Evan, normally they do not give me a copyright strike on that small little We Are the Champions. So we'll see if they give me a copyright strike. Hopefully not.
Well, that's nice of them. I thought they were picky and
they're
I thought they'd be
picky.
like, oh my gosh, you used 10 seconds of that audio.
Yeah, I think I've got it just enough to where they'll excuse me. Now they probably won't. Now they'll probably, especially now that we use the word copyright in what we're saying, they'll probably, definitely knock it down. All right, so that's it, y'all. That's the trade. And you do them over and over and over and over. It really is kind of simple. All right. Now, then you're trying to run your portfolio on 3 metrics. Your deltas should not exceed 0.0015 times your portfolio. So if you had a $100,000 portfolio, you would not want your deltas to be more or less than 150 to negative 150, right? You want to keep your deltas within that, because that's what we're doing is we're managing the chaos around theta. And theta is the fuel that makes our little accounts go, right? So now theta, we want to maintain a minimum of 0.001 times the portfolio's net lick value. So on a $100,000 account, we would want to maintain a minimum of 100 theta. Now, if you're just starting off building your account, don't do one big trade to get your 0.1 theta. No. You scale into it. So you just start with one tranche, and then you do another tranche another day, and then another tranche until you get the 0.1. Don't do it all on the same day. Rome was not built in the same day, and our portfolio shouldn't be built in the same day. Okay? So I change my maximum theta based on what the VIX is. So right now the VIX is between 0.5, 15 and 20. So I always want to keep 0.1% of my net lick in theta, but I do change my max net lick. So you saw in one of my accounts, I'm at 0.15 theta. Well, I don't want to be more than 0.2 theta. Some of you will say, we've heard this before, Bobby, don't we want as much theta as possible? No, theta is a measure of risk. The more naked puts you have, the more theta you will have, and the more risk you will have. It's just that simple. So you do want to monitor your theta, but you got to have enough in the tank to get you making the returns that you want to make. Well, Bobby, how much should we make on this strategy? I don't know. I think you should be able to do 20, 25, 30% running this strategy. How do I know? We've run it for 3 months and we're only up 1%. Okay. We went through Volmageddon. We were up 9%. So I think things will levelize. We're back on our way up. Okay. Any questions? Those are two of the metrics that we do. And the third, chaos. These are chaos. This is chaos. This is what you want to manage the chaos. And chaos is delta, and chaos is buying power. Those are the two big things that you want to control as you collect your theta. So everything we do is based on the VIX. The higher that VIX is, the more buying power or risk that we can take on in the account. Right now, we are VIX is between 15 and 20. So we should be looking at a maximum buying power of $30,000 on a $100,000 account. Now, with that said, if you are aggressive, I believe that it might be possible to run this strategy upwards of 50% capital. But that is if you are aggressive. So if you're uber aggressive and you want to run this strategy all the time at 50% of your buying power, knock yourself out. I'm a little more conservative. I'm old. I'm 52. I'm a Methuselah. I'm an old dinosaur. So I'm a little more conservative than most people. You want to run 50% net lick? Have at it. You're going to be tested more often. So just know that. All right. So we said that the strategy involves doing a 1-1-1 or 1-1-2. I favor the 1-1-2 because we're not tested as much. Now, it uses a little more buying power. And when you are tested, you need to keep in mind you're using more notional value because you've got an extra naked put here, right? 1 put debit spread, 2 naked puts, or you could do the 1 put debit spread and the 1 naked put and sell it where it's around $20. So I would probably be collecting $21, $22 on a 1-1-1. Okay. Questions so far? So we went through the put debit spread, closest to 60 days without going under. It's a 50-point wide spread. Cost about $10, right? And it's the actual cost in dollars to us is $50. Now, management. Under normal circumstances, the put debit spread expires worthless. Worthless. Normally, worthless. Permission is granted to close the debit spread prior to expiration if the spread is approaching 100% profit. But y'all, I'm not even looking at it now. The market's been up, 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 up. There's nothing that's a put debit spread of mine that's approaching 100% profit. Or if the current price of the underlying is under the profit 10 of the put debit spread and is at risk of exiting the profit 10, I wouldn't even look at it until it's in the final week. Who cares? Let those things go. I will close it if any leg of the spread is in the money. I'll close it before expiration to avoid assignment and exercise fees. The naked puts. So if you're doing a 111, you sell one put. If you're doing a 112, you sell two puts. Where did I do it? Close to 60 days without going under, just right where the put debit spread is. The strike, if you sell one, you're going to collect about $20 on it, or two puts to collect roughly $10 to $12. And I kind of err on the part of $12. So that makes me collecting $24 on this and buying a put debit spread for $10. Okay. Management. Naked puts are usually closed when 21 days are left in the trade, regardless of profitability, but subject to overall portfolio metrics. So if my portfolio metrics said that I had the minimum theta of 0.10 and one of my puts is ready to close because it's got down to 21 days expiration, would I close it? Yes, I would close it. But what would then I do? I would reestablish the position out at 60 days to replace the theta that I lost. So you don't have to replace it. If my theta here was 0.14, you don't have to replace it. You've got the minimum theta that you need in your account. Okay, back to our plan. Back to the plan. All right. So management. Normally I'll close them, and the spreadsheet tells you when they reach 21 days to expiration. And just close them, right? Roll them back out. Now, based on Tasty research that we showed the other day, if one of our puts reaches a 30 delta, so when we first sell them, they're at a 6 delta, 5 or 6 delta. If that puppy rears its ugly head and the market goes down, and it becomes a 30 delta or higher, we have permission to put the trade in problem child status and start recording the debits and credits of the trade to ensure that the trade is ultimately profitable. Okay, so let's see what that looks like. So let's go look at our little positions here. And let's look at our naked puts. And Ryan showed us that there is this cool little tool that you can put in here, and it's called Option Delta. Right? And you find it over here, Option Delta. It's one of the things that you can put in your little set. So you can then scan by Option Delta. So as you see, oh gosh, I've got some that are 11 delta. Oh wow. I've got some that are 10 delta, 9 delta, 7, 6, 5, 4, 3, 2, 1. Right? We've got all these that are just, wow. Nothing close to 30. There's nothing in danger of being tested, and there's nothing that I need to roll. Now, some of you may be saying, well, Bobby, if something gets to 68% profit, I'm going to close that puppy. That's fine. You want to close at 50%? That's fine. And reposition it, that's fine. But I'm holding on because my plan says I'm going to go to 21 days, regardless of what this is. Now, if my theta was too high or I was wanting to reduce risk, sure, I could take one off for 68% profit. But at a 7 delta, then there's no reason to take that thing off at all. Okay? All right, so the puts would be closed for a loss. The position can be rolled down farther away from the underlying price in the same expiration and repositioned by selling twice the number of naked puts. We call that a martingale strategy. That is where you're doubling up. So if it was a 112, I could turn it into a 114, right? And sell twice the number of puts so that the credit received is equal to or greater than the debit required to close the initial puts. So let's look at that on the spreadsheet. So you place it in problem child. And this is where I had one before where the credit initially on the naked put was $51. The trade went against me. I had to close it for $508. I rolled it out in time and I wanted to get a credit that was equal to or greater than the debit that I paid to close the trade. So I sold it for $527. Then I took profits on the put debit spread because it would be in the money, and I closed it and made a profit of $194.56. And then I closed the naked put that I sold for $527. I was ultimately able to close it for $165. So if you're keeping up with all the debits and the credits, then you go profit is equal to this minus that. So we had profits of $99.05. Isn't that cool? Isn't that wild? That's how you do it. That's how you do it. That's how you do it. Questions? Are you planning on adding a new put debit spread to cover the increase in the naked puts on the problem child position? Yeah, probably. What I'm trying to do, Candy, and is this. I'm trying to keep the number of put debit spreads at or above the number of my naked positions. Right? So that's what I'm trying to do. So my naked positions are 24. I got 42 put debit spreads. That's a high class problem. So I would look at this first and say, well, in this case, I would not, right? Because I've got way too many put debit spreads. So I'm trying to keep that about the same. Let's see if there's anything that I need to close over here. I need to look at this one today. Anything flashing? See, I got a lot of put debit spreads coming off though tomorrow. See all those with 1 day left? So those will be coming off. But yeah, great question. All right. So let's go back to the plan. Just wanted y'all to know that. So alternatively, the position can be rolled out farther in time. This is probably the least risky thing that we could do, and possibly farther away from the current price of the underlying and reposition so that the credit received is equal to or greater than the debit required to close the initial puts. That's what rolling is. And that's another good reason that in the micros that we're back down to the 60 days, because if we were at the 90 days, we could roll to the 120 if we needed to, but there ain't much where else to roll past the 120. There may be 180 out there, but it's going to be slim pickings. It's going to be low liquidity. So from the 60, if we needed to, we could roll to the 90. And then if that is tested, then we could roll to the 120. But if we were at 90, you can roll the 120 and that's about it. You're stuck. Now, if you are fortunate enough to be trading the E-minis instead of the micros, oh man, you can roll it out 2 years if you had to and still collect the credit. And hopefully one day in the micros, we'll have all of those wonderful strikes that they have in the E-minis. All right, so that's problem child status. Then trade entry. So trade entry is entirely dependent on the Greeks. So you're sitting there going, should I do a trade today? Well, what does your delta, theta, and buying power say? If all three metrics are at permissible levels, my plan says a new opening trade must be initiated daily, right? If the metrics say, hey man, you don't have enough theta and everything's whatever, you got to put a trade on. Now, if any of the three metrics are violated, you've got too much delta, you've got too much buying power, no new trade will be initiated unless theta is below 0.1% of the net liquidating value of the account, while any other metric is violated, then I have permission to open a new trade. So we saw that, didn't we? In which one was it? No, not that one. I thought we saw it in one of these. Yeah. No, not there. Maybe all my stuff was good. I guess all my stuff was good. But the other day, like here. No, that's not blue. Yeah, here. Our theta was low, but buying power was too much and our deltas were too much. So in that case, I had permission, but not a requirement to put on a new trade. Was the latest tasty study that inspired the 30 delta breach mechanic? Yeah. I think it's in our Discord room, and I think I put it under research. Let's see. I think I put it under research. Y'all see research, scream at me. Research. There's the written trading plan, right? Research. How does rolling impact tail risk? Right here. This is it. How does rolling impact tail risk? So you definitely want to look at that under our research tab. Okay. All right. Yeah, absolutely, Quentin. All right. So it's great research, and that inspired us to roll at 30 rather than strike breach. Okay. Back to the plan. Yes, Evan.
So Ed and I were talking about this the other day, and I figured I'd throw it out here into the realm of YouTube and Zoom to see what your thoughts were on it. The 111 versus the 112. Couple of the benefits I see using the 111 over the 112. When it does come time to roll, you can add another contract.
Yep.
Roll it out in time, roll the strikes down, obviously get you further away from the money. And you start out with less notional risk. So all of that's good. But I was also thinking about it. And if we're rolling at 30 delta, we would be in a lot less pain if we had one contract that went from an 11 delta to a 30 delta than we would be if we had two contracts that went from a 5 to a 30. Am I correct there?
You are absolutely right. You would have less pain, but you would have pain more often, right?
Right.
Yeah.
At which point you just roll it out into two contracts further out in time if you need to. But
yeah.
Something that I kind of observed as we were looking at this rolling at 30 delta thing.
Yeah, and I think
that helps us out a little bit.
I think that's great. And I think what I'm going to do is I'm just going to kind of do a combination of 111s and 112s, right? You know, we'll do a 111 today, 112. I don't think I'm going to have any major preference over either one. But yeah, I think that's a great point. We would have, we would have never had a problem child last year had we done 112s. The only reason we had problem children last time is because we were doing 111. So, you'll have more problem children doing 111, less with 112. But when you have 112s, the pain's going to be much, much more. Great point. All right. So I left in the Sweet Bobby hedge. I initially took it out, but every now and then I might want to put in one. Right. So if you want to put in Sweet Bobby hedge, that's fine. To me, they really mess with our metrics. Right. Now, do I think that the VIX hedge is going to mess with our metrics? I don't think so. I really don't. I think the VIX hedge is just simple. It's on the side. I'm just going to let it run. You could even do your metrics without the VIX hedge if you wanted to, but I'm going to run it with it. Protective puts, we found that a sweet spot for buying those was at 14 days to expiration, and I'm buying mine at around the price of 30 cents. Well, when will you do that? Well, if I was using too much buying power, that's something I could do. If I had too much deltas, that's something I could do. VIX hedge, right? That's what we, if you are curious about it, we did it in yesterday's video. So it seemed like a good time to run the VIX hedge. And based on what Matt told us, it performed very well during the last thing. Now, let me say this about the VIX hedge, because Rob sent me an email and said, Bobby, why not do a VIX call spread at a lower delta than the 10 delta, or a higher delta, I guess. Yeah, the thing is, we bought the, 60s yesterday. That thing will pick up. You do not have to have VIX at 60 for that VIX call to pick up. it will pick up and start working well before VIX is at 60. Because you'll rarely see VIX at 60. But if all crap hit the fan, you may. So that's why I prefer the call rather than call spread. Okay. But we went through this at length yesterday. And you can harvest your put debit spread. So you actually, if you had too much deltas or too much theta or too much buying power, you could close the short put out of the put debit spread, leaving the long put in place as a hedge to the portfolio. Absolutely something you could do. I rarely do that. All right, Treasury bill ladder. You know what we're doing with Treasury bills. We do that every Tuesday. Here's the Treasury bill. So if you missed this week's video on Tuesday, we went through buying the Treasury bills. In the IRA accounts, I use 50% of my buying power, or not of my buying power, of my net lick to buy Treasury bills. If it's in a regular margin account, I use up to 80% of the net lick. Ed's a little more aggressive because in Thinkorswim or Taste or TD Ameritrade, Schwab, whatever it is, they allow you to use like up to 98% and of your net lick as for Treasury bills. That's a little too much for me because I've had to close some early and I don't like doing that. So I try to max it out at about 80% of my total net lick. Okay. Now, when do you make adjustments to the account? Well, this is the good part, right? This is where you make your money. This is where the hard part is. This is where people can't do the strategy because this is the difficult part. So if any of the Greeks and trade metrics, delta, theta, and buying power are violated, I have permission, subject to my risk tolerance, to adjust my portfolio. I can close profitable positions or I can close losing positions. Really, we're talking about the naked puts here. So if I'm closing or rolling positions, that would decrease my delta, it would decrease my theta, and it would decrease my buying power. That would be closing a naked put. If closing the short put in the put debit spread, right, that's the same thing. Closing or rolling position. I can roll the positions to extend trade direction. All of that decreases delta, decreases theta, decreases my buying power. All right. I can also sell futures to reduce my deltas and buying power. You need to know how many deltas of relief you get if you sell an MES contract and how many deltas of relief you get if you sell an ES contract. If you sell a future, it's going to decrease your delta. It's going to neutral effect on your theta. It has no effect on your theta whatsoever, and it's going to decrease your buying power. Nick says, have you thought about using the toss vol smile and seeing the optimal spot for a futures hedge and put a limit order in at that price? No, but that's something I could do. Certainly. Your protected puts are only in the ES, not the MES. Yes, that is correct, Mike. I like doing them in the ES. And not, what did my thing say? What was that? Protected puts. Yeah, I probably should say protected puts. How about this? Why don't I do this? Protective ES puts. Yeah. That makes sense. Protected puts usually 14 days to expiration. Let me save that. Yep. Good catch. All right. So futures have no effect on theta at all. All right. I could buy cheap protective puts to reduce portfolio buying power. That's what we talked about. If you do that, that's going to decrease your delta. It's going to decrease your theta and decrease your buying power. I should put ES there, I guess, too. Buy cheap protective puts, right? To reduce my portfolio buying power. Or I could sell 10 delta or less calls nearest to 60 days to expiration. Now, Stacy does a 111 or 112 with those calls. Evan just sells a call. I think I would just do a call, right? You can sell calls. And what will that do? That's going to decrease your delta. It's going to increase your beta because you're selling additional premium. And I put neutral on buying power, depending on what your overall metrics are and how your account's set up. It could increase your buying power. It could decrease your buying power, or it could have very little effect on your buying power. So I just put neutral there. But the most important thing about our entire portfolio strategy is this. It's running the process. If you love this process, you got to respect the process, trust the process, follow the process, then winning the championship is an inevitable result. Today is opening day in baseball. It is also opening day in my daughter's 7 and 8 year old softball. And so we have our first game tonight. And so the kids won their first scrimmage game, and they won their first scrimmage game not because of their offense. It was not because they hit the ball better than the other team, but it was because their defense was spectacular. And we spend so much time with our girls on defense and situational awareness. You know, if a runner's on first, where's the play? Well, if you're a first baseman, you're going to get the out at first if the ball comes to you first before you try to get that out at second at their age. Right now, you know, if you're a professional Major League Baseball player, you might try to get that out at second. We go for the sure out. If nobody's on base, you know, the out's at first. If we've got someone on first and second, if it comes to the shortstop, you got to go because they don't really throw the ball to each other that well. So whichever base you can get to quickest is the one that you go to. If you're second baseman, right, and we got someone on first and second, your deal is to try to tag the runner at first, going to second, or beat that runner to second base. So we go situational awareness. And then at the end of the game, we'll, you know, or at the end of the practice, we're like, man on first and second, where's the play at? If you're here, and we'll point to the player, where's your play? You know, Coco is our pitcher. You know, Coco, if the ball comes to you and the bases are loaded, where do you go? You know, so Coco knows what to do. So my daughter plays first base. She knows what to do. You got to know what to do in the process. There's a process to all this. And our girls, they may not win a championship this year, but let me tell you something. We're going to win our fair share of games because our girls have situational awareness. And that's what you got to have in this process. You've got to have situational awareness. What the market's doing, what do I do in the event of an emergency? Because remember, what we do is really, really simple. And we said this yesterday, and I want to go through it again. Where's my darn little point, my thing of my jig? Let me pull that up. Okay, so here we go. So what we do is this. We sell premium, right? And we put the probabilities in our favor. Probabilities in our favor. Matter of fact, we've got a 95% probability of success as soon as you put the trade on. How about that? Now, that particular trade could win or lose, but over a series of large number of trades, we're going to win. Number two, we allow theta, right, to decay and to collect into our accounts as profit. Right? Theta collection. And your job is to allow the apple to decay into a core. So when you buy it back, it's either expired or you buy it back for cheap than what you sold it for. The third thing is, this is where the money's made. And this is why most people watching this video can't run this strategy. Because you can't handle the chaos. You can't handle your account being up 9% on the year and going down 5% on one day. You can't manage that. You can't manage the emotions of fear, greed, and envy. You just can't. But because of the chaos, it's why we have something that has a 95% probability of success. It's those 5% of days where you have to manage the chaos that makes the money in the strategy. You could not sell premium, as juicy as it is, if it were not for the chaos and the risk of ruin and why people won't do this. So how do you manage the chaos? That's the adjustments to the portfolio. That is managing your buying power. That is managing your deltas. And if you can do that and allow the theta to decay and to collect in your account, then you're stellar. Now, number 4 is rinse and repeat. You just do it over and over and over and over again. Probabilities in your favor, collect the theta from selling the options, manage chaos around the collection of theta, and rinse and repeat. Mike says these 4 actions that affect delta, theta, and buying power, are they independent, separate from putting on a 111 or 112? Would it be beneficial to add what adding the 111 or 112 does to the 3 metrics as well? Well, maybe I took for granted that we know that, but let's make sure everybody does know that. When you're adding a 111 or 112, it increases your delta, it increases your theta, and it increases your buying power. Maybe I could put that in there somewhere, right? What I could do is I could do, how could I do that? Here's what I could do. We could go over here and I could say, components of the strategy, put debit spread, and the naked put. And then I could go and do something like this and go Control V and 1, 1, 1 or 1, 1, 2. And let me ungroup those. Here, we'll have you a nice little thing. This is kind of neat. All right, and let me ungroup these. And ungroup these and see if we can get us a nice little thing here. See if this is what you're looking at. So then we'll go, let me delete him and delete him and delete him and delete him. Then I'm going to copy him and we'll paste him here. And then we'll move him over here, right? So you put on a 111 or a 112, it's going to increase your deltas, right? It's going to increase your theta. Because you guys need to know this stuff, right? And we'll just move this little joker up right here. That looks pretty good. Let's make sure he's even with the other one. Increase our theta, increase our delta, and then it's going to increase your buying power. I kind of like that. Then maybe let's give it a little introductory sentence and see if we can still fit this on 4 pages. Paste. And move him over. How's that look? Yeah, so the 111 or 112, let's see, how can I say that? Naked puts. Did I have an introductory sentence for it over here or not? No. Yeah, I like that. Kind of like that. Yeah. So 111 or 112 strategy increases your delta, increases your theta, increases your buying power. And then let's see if I can squeeze that. over here, trade entry to the next page. Yeah, optional hedging. Let's take up a space here. Let's pull this up. There we go. Still got it on 4 pages. I love it. So I guess what I need to do is change the date on this. So I can post it and let everybody know we had a little change on it. 3/29/30, right? 23. Anything else that y'all see that needs to have decreased buying power? Did I put decreased buying power? Yeah, it should increase buying power, right? Any specific topic planned for tomorrow's Muscadine session? What we're going to do tomorrow is go through the our new account and see if it needs any adjustment. But is this helpful, y'all? Does this help y'all in knowing what happens if you put on a trade? It's going to increase your deltas. It's going to increase your theta. It's going to increase your buying power. I love it. Look at there. So I'll post that with that in the 3:30. Let me save it. File. Save a copy. Yes, 3:30. There it goes. I'm not changing my plan. You know it, Nick. You know it. You know it. All right, questions. Anybody got any questions? That's our best practices of the 1-1-1 and 1-1-2 trade. All right, someone says, do you have the ratio you are trying to keep between put debit spreads and naked puts? So, Candy, here's what I'm trying to do. I'm trying to keep a 1-to-1 ratio of those. I don't have it in the plan, though. Maybe I need that in the plan. Yeah, that's a good. Let's see. Let me go back to the plan. Share screen. See where we can put that. Look at us making changes to the plan. We don't even change the plan. Let's see. We could say, how about right here? Ideally, a 1-to-1 ratio of naked positions, not puts, right? Naked positions to put debit spreads is preferred. How's that sound? Ideally, a 1-to-1 ratio of naked positions to put debit spreads is preferred. Yeah, I like that. Right? Anything else that y'all think of we need to put in the plan? We'll do it. We will change it. Yeah, there it goes. And y'all know me. I'll say, hey, we're not going to change it. It's done. Blah, blah, blah. And then what do? Let's add something to it. But I really don't want it to go over 4 pages. I love it at 4 pages. It's just simple, nothing to do. It's just ready to go. All right. All right, good. Ladies and gentlemen, that is the best practices of our 1-1-1 plan. And I will see y'all tomorrow.